fourth, I guess, series of Liberty Bank's financial wellness. We are so excited to be back to talk to you guys today about how to really develop yourselves and with your companies. The topic today is going to be using your financial statements as a roadmap. And let me tell you, that really is the perhaps most important aspect of growing your business, coming to talk to your lenders about growing your business and getting the money, frankly, that you need. Today we're going to be joined with, somebody really special. Matt Sims, who is Senior Vice President with Liberty Bank. He is one of our senior and master lenders. And really we're very honored to have him because he brings 21 plus years of lending, of commercial, specifically commercial lending, to the table. And so he is probably the best person that could help understand this whole idea about financial statements, why it's important, and really what he looks for, what we look for as an industry in helping you grow your business. So welcome, Matt. You want to say a couple of things?
Well, thank you very much. I'm pleased to be here, and thank you so much for the very generous introduction. And I look forward to questions and engaging with our audience.
Awesome. So, all right, guys. Today, this is live. We're hoping that you have put together a number of questions, and because we have the expert here, and so we're gonna start off, and I'll be reading them. So don't make them too long, but I'll read the questions as they come along. Again, we want this to be as interactive as possible because it really is all about uncovering the myths, I guess, understanding how to truly get to the yes answer, right, with growing your business and or financing your business. So we did get a question first, and it's a pretty long question, so I'm going to try and read it real quick. It says, this person says, I'm a new customer, but I've been in business since 1968. The first business was a restaurant, and as a sidebar, this person is now an actor and a math tutor. But this person also ran a security company. Now they are working they have another business that is in tax, finance, and media production. The question is, he wants to expand, and they want to open a research center, or science research center for STEM. And it want to be able to engage engineers, people to go into the engineering field, students to go into the engineering field. This person says they need a loan for $303,000.
Okay.
And so, wow, that's a lot of stuff.
Yes.
Matt, when we look at people who come to us, and it's obvious that this person has a wealth of business, knowledge and how to run and start a business. What would you say to this individual with regards to their current ask?
Absolutely. Well, thank you for the question. So it sounds like this individual does have quite a background, quite a educational background, quite a background in a number of things that they've done throughout their life. Very well educated, it sounds like. Anybody that has some kind of degree in math or certainly can tutor math, I have a lot of respect for. And so what we would probably ask is for them to try to streamline their ask a little bit more, to give us a little more detail about the type of business that they are starting. I'll say starting a STEM research center is probably not a very common business, although there actually happens to be a such center here in the building that we reside in. So what we'd be looking for is some real detailed information on what are the revenue sources for a business like that? What are the asset requirements for a business like that? What is the potential success rate of such operations? All of those things would go into helping us to understand whether or not this is a business that we would be able to invest in. We'd also like to have to look at that individual's background and see how well suited their background is to the business that they're looking to go into, this STEM research center. And if they don't have all the requisite requirements, who are they going to be able to bring in to fill those voids where they may not quite fill themselves? And of course, we're going to look at their track record on the businesses that they've run in the past. How successful were they? So those are the kind of things we would be looking for.
I mean, it's interesting because, again, it's obvious that this person has some really good background with running a company. But this, actually, we would be looking at this as a startup. I mean, it's not like we're going to use the successes or the failures. We might use the failures, but we're not going to the successes from the previous companies that this person has run. We have to look at this as a totally new venture and in its own merit, and a lot of the things that you suggested with regards to the details of how you're gonna make money, how you're gonna pay the bills, how you're gonna pay me back. You did mention to a point that you're gonna look at that person's resume as well, and does the resume give you a comfort level with that this person can actually run from a skill set, right?
Sure.
Run this business, but let's say the person doesn't have the resume, they have the business side that will give you a comfort level, the skill set. What are the other things that you may use to lessen your anxiety about risk?
Yeah. Let me first off start by just making a comment about startups in general. Certainly our banks and most banks don't do pure startups. But because there's so much uncertainty, whether or not, this person's never seen this type of business before, they've never operated this kind of business, so they have very little experience possibly from a pure startup perspective. And so for that reason, most banks won't do a loan for a startup until the business has been in existence at least 3 years, 4 years. At least the bank will have some idea of the track record that the business established over that period of time. And that's for very good reasons. For startups, and I'll get to your question in just a second, for startups in general, they're probably going to be financed with the person's savings. Maybe family members might be willing to invest, or maybe an investor might be, an angel investor might be willing to put some money in if they believe enough in the business. Obviously, those individuals who are at the start of that business who are going to invest in is going to expect a share of the business, which the bank will never get. And so for that reason, we won't normally do a straight startup, but not all startups are alike. So certainly some startups are just this person could have been doing something very similar for a long time for somebody else, but now they want to do it on their own. So they certainly come there with all of the requisite experience and knowing how to operate this type of business. And so they could parlay that into a successful business of their own. So that would be something that we would certainly be willing to look at. And Ann mentioned earlier, we'd certainly look at all of the experience that that person has had and see how those experiences will impact, hopefully on a positive sense, the new business that they're looking to start up. And the other thing we would do is there could be sufficient collateral. Let's say the person had, they want to use the equity in their home or maybe the equity in an investment property that they own to secure the loan. That may be a way for the bank to get comfortable with the deal because they know they have a backstop in the case the business doesn't work. And the last thing I'll mention is there could be cash flow from a source other than the new business that would support the loan. So now we're not looking necessarily at the new business to support that loan, that $300,000 loan request. We're looking at this other business that's been established and can show clearly that that business can support the loan. And so we're now going to give that person an opportunity to see what they can do. And if they don't, we still know we have this business up and running and continues to support this loan until the loan is paid out.
So, I mean, that's really good information, and is very helpful in understanding what the components of looking at, and we're going to call this particular question a startup.
Sure.
We're going to focus. We have yay! We got a lot of questions coming in. Yay! But we want to make sure we get to the topic at hand, and that is diving into this idea of the financial statements,
Absolutely.
right? And using financial statements as a roadmap. I'm going to take a question, and then we're going to dive into the idea of this roadmap and how we can help people understand how to navigate. The next question we have is, does Liberty Bank work with new nonprofits who raise money through donations, fundraising, and grants, and do not have 3 years of profitable financial statements? I guess the question is that in many cases, how do we work with nonprofits? I'm gonna ask the question a different way. How do we work with nonprofits?
Sure.
If that nonprofit doesn't have traditional financial statements, and perhaps I would think that a nonprofit is probably looking for cash flow, right? Because if they're working with grants or donations, then their revenue sources are very volatile, right? And yet they have consistent expenses. They gotta pay the light bill. They gotta pay the rent.
Gotta pay their salaries.
Gotta pay the salaries, right? And so there is probably a need for a line of credit or a working capital line of credit. Can you touch on that? And the question again was, do not have 3 years of financial statements.
Yes.
Wait, 3 years of profitable financial statements.
Yes, I understand that one. I can tell you that it's not the easiest loan to do because more than likely for a nonprofit, the loan would probably have to be unsecured because not many, especially new nonprofits, are going to have very much in terms of solid assets, hard assets as we call them in the business. They're not going to have a building. They're probably not going to have very much in receivables. And so it makes it somewhat difficult to do a loan because we don't have a sure primary source, and the primary source would be the cash flow from a profitable operation. And it sounds like it may be hit and miss. And the second thing, we don't have a secondary source, which would be a solid piece of collateral that we could have as a backstop in case for some reason the deal ends up not working. And third, we don't have a guarantor for most of these nonprofits. So,
but not that you wouldn't. Let's talk about that. In many instances, the nonprofit or the directors or the people who are the founders of a nonprofit
absolutely
may be able to serve as a guarantor. And so in those instances, because as you said, without all of that, it's really going to be like, no, we can't do it. But,
right.
But there, we can always find a way. But there may be some opportunities if if that person or if that nonprofit and the people who are closest to seeing its success are willing to
lend their hand, or at least to guarantee the loan, and maybe even to secure the loan with a mortgage on their own personal residence. And so that would be a way to get the bank comfortable with many of these things that we're talking about. Or if So if the nonprofit has 3 years of operating, we know that most nonprofits really don't turn a profit. They certainly don't turn a consistent profit because the word nonprofit means that it's probably not somebody that's trying. Their orientation is not to make a profit. So they'd either break even or maybe have a small surplus. And if they're doing that, then there may be something to work with. Now, you don't want to go in asking for a huge loan. You may want to go in asking for a small facility, $5,000, $10,000, to get the bank comfortable with what you're doing, how well you manage your affairs. And as Ann has indicated, it would probably show some good faith that the director or whoever the originator of this nonprofit was to sign on the line as a guarantor, and hopefully that individual has good personal credit. And while I mention that, let me just talk about how valuable that is. That is having good personal credit history. What we know about small businesses that as the business goes, so does that individual.
Right.
So we can almost look at the individual owner's personal credit history and almost predict how well that business is doing. If that individual owner is paying all of their bills, they've got a great credit score, chances are that business is doing very well because that is their main source of revenue, their main source of income. So if they're eating well and buying and paying for their cars and their homes and doing all the other things you would expect an individual to do, then likely the business is doing well. So it's very, very important that you keep track on your own personal credit history and make sure you're making those payments on time, that you are using your debt appropriately. And a couple big things. I guess the two biggest things I would mention to anybody with respect to making sure you have a good credit history is paying your loans on time. So use automatic debit if you can. And secondly, making sure that you don't overburden your available credit. So for instance, if you have, let's say, $50,000 worth of credit, your credit score is going to be better if you have $50,000 worth of credit, but you only have $10,000 of debt borrowed on that, as opposed to having $50,000 worth of credit, but you have $45,000 borrowed up on that $50,000 in credit. So the availability that you have on your credit is going to make a big difference with respect to your credit score.
Yeah, absolutely. I mean, honestly, although there's services like Dun & Bradstreet that could give, a credit score on a business,
Sure.
Most small businesses, most moderate-sized businesses, a lot of large businesses don't subscribe to Dun & Bradstreet, and so the only thing we truly have to look at is your
personal credit score
situation. So let's dig a little. We got a lot of questions, but I want to dig a little bit more into the topic at hand, and that is, these financial statements as the roadmap.
Absolutely.
Everything that we talked about, your skill sets, your resume, the collateral, all of the above, yes, they're very, very important.
Yes.
But there are a set of documents that the bank is going to use to give us a clear indication of one of the C's of credit, the ability, right, for you to be able to pay us back.
Sure.
Right?
Absolutely.
And that's the financial statements. Now, there are a whole lot of different financial statements based on how complicated your company is or how simple, the company is.
Okay.
From single person LLC or a sole proprietor to, regular corporation. But the three basic financial statements that you're gonna need to be able to produce. Balance sheet, the income statement, and we like to see cash flow.
Yes.
And so why don't you tell us a little bit about what those three financial statements, those critical, initial documents tell us.
Okay, absolutely. So these three statements that Ann has mentioned, the balance sheet, the income statement, and the statement of cash flow, all work together. And they have to be in balance with one another. the main purpose of the balance sheet, and the balance sheet, by the way, is what we call a point-in-time statement. So whatever date that balance sheet is done, that's the date that it's good for. Tomorrow it might be it probably will be different. So the balance sheet is basically going to lay out the assets that the corporation owns. It's going to lay out the liabilities. So the bottom side of that, or the other side of that balance sheet, and it is called a balance sheet for a reason. It has to be in balance. So the one side is going to contain the assets that corporation own, whether it be cash in banks, equipment, your real property, your buildings, your land. And it may have some other things such as debt to other companies or debt to individuals. On the liability side, of course, is going to be any debt that the business owes. So it might be, you might have a line of credit, you might have a term loan for some equipment or a building that you purchased. You're going to have your accounts payables. These are going to be the debts that you owe your creditors. So if somebody providing you with inventory services, the payables are going to be to those individuals. And the last part of it, the difference between the assets and the liabilities is going to be the equity. The equity is what you own. So let's just give a simple number. Let's say you got $100,000 worth of assets, of all your assets. And then you've got $75,000 worth of debt of all kinds. That'd be your loans, your accounts payables, and other liabilities. And so the difference between the $100,000 in assets and the $75,000 liability is $25,000. So that $25,000 is yours. That's what you own. That's what the company is worth to you, $25,000. Now the income statement is not a point-in-time statement. It is a period of time statement. So for instance, you could have an income statement that runs for a year. It could run for 3 months. Or it could run for half of a year. But it's gonna, if one that runs for a whole year is gonna depict all of the transactions that has occurred in that business for one solid year. Okay, and let's just say you have sales of $100,000 in that year. Your cost of sales were $80,000. Any other expense was $10,000. It means you have $20,000 profit in that particular year. And so if you take that $10,000 profit, it should match the increase in the equity in your business, because that's what the business has grown during that year. So the two fit together. And if ever the balance sheet does not equal the balance sheet, the change in the balance sheet from year to year does not equal the profit, then something is off.
So that's really, I mean, Matt has said a whole lot of stuff and people are going, huh, right? But I think the biggest issue is really, what do I know about my financial situation? What are these financial statements telling me first? Because, people think, oh, I got to get financial statements prepared for my banker. No, you have to get financial statements prepared for yourself.
That's absolutely correct.
Right?
Yes.
I mean, because, you have to learn and know how to manage your business through those numbers and what those numbers are telling you.
That's right.
And oftentimes when you come to talk to us and we ask about the financial statements, we are going to we're going to probe and ask certain questions to determine, do I really know do they really know what their financial statements
That's right.
are saying to them, or did an accountant or a CPA or someone prepare? But you said another thing that was really interesting about the equity, that profit that business may have shown in 1 year, or in that 1 year's financial statement, set of statements.
Sure.
But we really don't just look at 1 year.
That's right.
I mean, we look at a trend.
That's right.
At least a minimum of 3
Absolutely.
years. And why is that important?
Yes.
What are we looking for in that profit or expenses or income going up and down? How do we use that
Yes.
as a roadmap?
Absolutely. And so basically, when we're underwriting a deal, we're trying to determine, based on some period of time, normally at least 3 years, the ability of this company, this entity, to support the obligation that they're requesting of us. So we don't want to, so we're looking historically, certainly, so we're looking back 3 years, And we want to see, based on the cash flow that that business has thrown off during that 3-year period, whether or not this company could have supported our debt for that prior period. We hope that's the case, but if it's not, there is a possibility that something is going to change as a result of the loan that they're borrowing from us. So for instance, if they have now they have to provide us with some projections going forward. So they say, with this loan, we're going to be able to double the size of our business. We're going to be able to reduce the cost because we're going to buy a piece of equipment that's going to be a whole lot more efficient. Something is going to change so that even though the company was not able to support our debt based on the previous 3 years, something's going to change in that business as a result of this loan. And now they're going to be able to support the debt. And if they can justify that to us and we can get comfortable with it, there's a good chance that we can feel comfortable to make that loan.
So I want to take a couple of questions, Matt, because we got a lot of friends out here. Okay. This next question is there assistance from financial institutions for seed funding or are there other recommendations? Startup funding.
I must say that I'm not familiar with, certainly there's probably some organizations out there, but as you might imagine, our job is to try to find good loans and fund good loans. So it's not our main orientation to try to find opportunities for businesses to seek finances. I indicated earlier, one of the best sources for people looking to get into business would be family members, friends, somebody that you know and trust and who have your best interests at heart, and see if you can convince them to join with you to do this business. Because chances are that if you can't do that, if you can't convince somebody else, your family or friend, somebody that loves you, it's going to be very difficult to convince the bank to engage in that.
There's wealth of resources. I would recommend, if you're a startup or if you're a business that's looking for seed money to start your business, you might want to check with your local small business development centers. They at a minimum can provide some technical assistance and other resources. Oftentimes, they're small, they call them microloans that based on the business and just kind of where you are in your growth process, they may be able to offer you. And the beauty of that is that we have relationships with a lot of the small business development centers and the New Corps of the world or the other agencies that offer assistance to small business. We have a lot of relationships, so they will refer you back to us once you are at a point that you're not. You have some equity that you can inject into your business.
Yeah, and let me just mention that because you did bring up a good point. And I know Liberty Bank has a arrangement with Nucor, a local New Orleans-based nonprofit. That job is to help small businesses and new businesses get started. And even though they would probably be offering you a loan, they're a lot less critical than we might be. So it might be a good place to go to get started. Okay. And so whatever community you may be in, there's probably a similar organization. We also have an organization here called the Regional Loans Corporation. Again, it's an organization that will do a loan for a business that may not be ready to get a good loan from a bank, but they have a good idea. And so it's an organization whose role it is really to inject capital into such businesses with a great idea and hope that will get this business going so that maybe in 2, 3 years, 4 years, they are ready to come into a bank and get a loan.
So that's excellent. Very good information, Matt. I want to quickly run through a couple of questions, and then we're going to take a little bit more insight because I think we're running out of time. We got to have this a much longer session because we have some really great activity going on. It says, will you ever have a webinar specifically for real estate investors? Yes, we're going to do that.
Yes.
We promise we will do that.
Absolutely.
It may not be the next one. Well, it might be. I don't know. But we will do it. Let's see. Does your bank do the overseas citizenship or resident to open an account? So what you can do is to contact our customer service, customer care, called 504-240-5100. Have them tell them that you were on the webinar. You asked a question about the resident account for overseas citizenship, and tell them, please connect me with Ann Duplessis, and I'll give you a call back and answer your questions. Do you have programs for doctors? Absolutely. Again, we're going to want you to contact us. We will give a web page, a website. I'm sorry, scratch that. An email address at the end of the session, so that you can reach back out to us, and we promise you we will be getting back to you as soon as possible. Within, if not the same day, by the next day. Now, if you email me on Friday, I won't call you back until Monday, but we will definitely.
And let me just quickly interject. We love medical professionals because they are in great industries. They're primarily recession resistant, and normally they make pretty good funds. So we'd certainly be more than interested in looking at any medical professional.
Great. Now, we have a question from someone. It sounds like this person is a CPA or something. They're saying, my clients have 2 years worth of tax returns, personal financial statements, cash flow, and plenty of debt coverage. Call us. We want to talk to him.
Absolutely.
Yes, we would love to develop a relationship with you as well, to be used as a resource for your clients. And so this is that's good. That's a good piece.
And can I quickly mention, we talked about the business financials.
Yes.
We didn't talk about the personal financial.
I was getting ready to go there.
Thank
Absolutely.
you very much. And so what I would like to say is the personal financial is as important as the business financial, because I know early in my career, I have these various opportunities to do loans for people that, man, they drove nice cars, they had beautiful clothes. I mean, everything was beautiful. But when you get a personal financial statement, you just did not see the assets. So basically what they had done is they took all of their money and bought these very disposable things that don't account for very much on the personal financial statement. So what I tell you is, some of the things that you want to make sure you're doing is you want to have a good amount of liquid assets. So that's going to be the cash that you might have in the banks, CDs, savings accounts, and certainly your retirement funds are considered liquid assets. And then on the hard asset side, it would be nice to have a home. And I would just, as a matter of course, I would encourage anybody that is renting right now, find a home that you could pay for with the amount that you're paying in rent. The quicker you can get a house, that is the quickest way to build your equity personally. And so, having a home would be a great thing. Those are great assets to have. And so, and obviously you want to make sure you curtail your debt. So if you have student loans, I know they give you 30, 40 years to pay them off, but don't do that. Pay them off as quickly as you can, because the quicker you pay off those loans, the quicker you're going to start building your equity. So pay close attention to your own personal financial statement, so that you go in with a good, healthy, strong financial statement that your bank is going to love.
I think that's excellent. I mean, I think, the beauty about Liberty Bank is that not only can we work with you to grow your business, because it's all about wealth creation, right? Owning your own business and being able to have something that can create legacy and that you can create wealth for
Absolutely.
your family is very important to us. I mean, we're very passionate about that issue, and as passionate from the business side, we're extremely passionate about home ownership, right?
Absolutely.
And so we offer an array of products that will allow an individual to get into a home. In some cases, we can work with people with no money down.
Absolutely.
I mean, not all cases, but in some cases. And so, we do encourage you to come and talk to us. Give us a call. We'll be putting an email so that you can reach us to talk about not only your business health, but your personal health,
Sure.
financial health, and how we can help you build wealth and create legacy and create something to leave to for your family. It says, we have one more question. It says, I have a startup that needs capital to expand but have bad personal credit. How do you suggest I move forward? And that'll be our last question.
Okay, so as I mentioned earlier, personal credit is really good. So the first thing you would probably need to do is to work on that personal credit history to see where you went wrong, what is causing the problems, if they're old, small debts that you just didn't pay attention to, medical collections, things like that, cell phone collections I find a lot. Figure out how you can get that cleaned up, and then once you start getting that cleaned up, that'll help to at least give the bank an appetite to look at you and try to point you in the right direction. But the first step has to be on that individual to try to clean their personal credit history.
And again, there are organizations out there that really work with you to help clean up. Now, we would never suggest that you pay anyone to help clean your credit up. Never suggest that. And so there are legitimate organizations that are there to help you, to work on cleaning that credit up. And there are a lot of resources as well on the internet. Matt, this has been fast, right?
Yes, it
I've
has.
enjoyed this.
It has.
There's so much information that we can give you. We want to thank everyone who participated, everyone who dialed in. I guess not dialed in. I'm telling my age. I guess you
logged in, logged on.
Okay, that's what I'm looking for. Who logged in and participated on this webinar. We will most definitely continue this series. Let us know what you want to hear about, right? And we'll most definitely try and bring the right expert in to have that conversation. This has been enlightening.
Yes.
We know the takeaways are, the financial statement is our roadmap. It is your roadmap. You have to know as much about what those numbers are saying than we need to know what those numbers are saying. And so take those financial statements seriously. If you're even thinking about growing your business, make sure that you file your taxes, timely.
Sure.
Because we also use that tax return to confirm what the financial statements are saying. So we want to thank you. We want to ask you to please, contact us again here at Liberty Bank. Check out our website, www.libertybank.net. And Matt?
It's been a pleasure. Thank you for inviting me, and thanks for the various questions.
Thank you.
Is it on tape delay?